If you're an Indian investor with money overseas, you've probably heard of the Annual Performance Report, or APR. It's a yearly compliance task you absolutely cannot afford to mess up. But don't worry, it's not as scary as it sounds. In the next few minutes, we're going to break down everything you need to know to get it done right, and get it done fast.
So here's our game plan. First up, we'll figure out if this is even something you need to do. Then we'll look at what happens if you're late. Trust me, you'll want to know. After that, I'll walk you through, step by step, how to actually file the thing. And we'll wrap up with the super simple checklist so you can get everything ready beforehand. Sound good? Let's dive in.
All right, Section 1. Do you need to file? This is, without a doubt, the first question everyone asks. So let's get right to it and see if this applies to you. So, is this your responsibility? Let's not leave it to chance. The rules are actually pretty specific, so let's break down the 3 core conditions that mean, yes, you've got to file. It really just boils down to these 3 things. Think of it like a quick quiz. 1. Are you an Indian resident or entity? 2. Is your investment considered an ODI, meaning you have control or at least a 10% stake? And 3. Was that overseas company up and running at any point during the year? If you answered yes, yes, and yes, then you're on the hook. Filing is mandatory. Now, this is where a lot of people get tripped up. They think, oh, my overseas company didn't do any business, or it actually lost money, so I don't have to file. Nope, that's not how it works. As you can see, even if it's dormant, loss-making, or being liquidated, you still have to file that APR. The only times you're off the hook is if it's not a direct investment, you sold it off completely before the financial year started, or you never actually sent the money. Okay, let's get into Section 2. We know who needs to file. But what happens if you're late? Or what if you just don't file at all? Well, the consequences are pretty serious, and believe me, it's not just about paying a fine.
Yeah, this is a lot more than just a little slap on the wrist. If you fail to file on time, it can literally freeze your entire global strategy. You won't be able to make any new overseas investments or even change the structure of your current ones. Why? Because the RBI's online portal, firms, will just block you. Plus, you get a big red flag next to your name in their records, which, can open up a whole other can of worms.
And of course, there's the money. The RBI has a very straightforward late submission fee, or LSF. It's not complicated. The longer you wait, the more it's going to cost you. It kicks off at 7,500 rupees, but then it doubles, and then it doubles again. It adds up, and it adds up fast. So the big number to remember here is 50,000 rupees. That's the maximum late fee. But, and this is the kicker, that's per APR, per overseas company. So if you have multiple investments that you're late on, you can see how this could get very, very expensive. It's a headache you just don't need. Okay, enough of the doom and gloom. Let's talk about the solution. Section 3 is all about the how-to. We're going to walk right through the filing process on the RBI's firms portal. And honestly, it's probably more straightforward than you think. First things first, you're going to log into the firms portal. Once you're in, you're looking for something called the FLU module. That just stands for Foreign Liabilities and Assets. Easy. From there, head over to APR submission. The most important thing here is to make sure you select the correct unique identification number, the UIN for your overseas entity, and of course, the right financial year. And now for the main event, actually putting in the data. This is step 3, and the portal breaks it down really nicely into 3 simple sections so you don't get overwhelmed. Section A is the easy part. It's just the basic info on your overseas company, name, country, that kind of stuff. Then Section B is where you plug in the key numbers from their financial statements. Net worth, turnover, profit, or loss. These are all standard figures you should have on hand. And finally, Section C basically tells the story of your investment over the last year. You start with the opening balance, add in any new money you invested, subtract anything you took out, and you end up with a closing balance. It's just a simple reconciliation, that's all. We're on the home stretch. Step 4 is where you upload your documents, the most important one being the audited financial statements from your overseas company. Then, for the final step, you'll just confirm a few declarations, hit that submit button, and listen, this part is critical. Save the acknowledgement number. That number is your proof, your golden ticket that you filed. All right, for our last section, let's get you prepared. This is an actionable checklist of everything you should have ready before you even think about logging in. A little prep work makes the whole process so much smoother. So here they are, the 5 key numbers you absolutely need to pull from your overseas entity's financials. Total assets, total liabilities, net worth, turnover, and the final profit or loss figure. Just have these numbers handy and you'll fly through the data entry part. And these are the documents you'll want to have saved as PDFs ready to go. You'll need the whole set of audited financials. That means the balance sheet, the P&L account, and of course, the auditor's report. Okay, now this is a really important tip that a lot of people miss. What happens if, by law, your overseas entity doesn't even need an audit? Are you stuck? No. The rule is you can still file the APR with unaudited financials, but you must attach a certificate from the company's management that confirms the numbers are accurate. Knowing this little workaround can be a real lifesaver.
And that's a wrap. See? Not so bad. Remember, filing your APR on time isn't just about avoiding penalties. It's about keeping your international investments healthy and in good standing with the RBI. So I'll just leave you with this one question to think about. Are your overseas investments fully compliant? Thanks for tuning in.